All right, good evening, guys. Ken at Tortoise Capital. This is the nightly strategy podcast for Friday night, January 8th, 2021. Countdown to impeachment. Get rid of that clown. Tomorrow's webcast will go at noon instead of 8 p.m. Central because of some soccer matches we have in the evening, so I'm going to get that done at noon. And I'll put that announcement on Patreon for you. You have the copy of the weekend reports, and those are already posted in Patreon as well. So let's just review what happened today real quick, and then we got one case study to go over tonight. Whoops. It would help if I plugged in the mouse. Let's see what we got there. Stand by. Okay, so now everything's plugged in. Let's take a look at our 30-day. So we made a new 10-day, 30-day, and all-time high today. We're now at 381. Pushing the boundary of Z3 again. It was a large range day. It started up with a gap up, sold off, and then had a really strong recovery into the weekend after a coup attempt, after the Great Rebellion. And that's a very positive sign going into the weekend. The RL30 extension strengthened, and now you can see the that gap between that and the PSAR is widening. That's a very positive sign. The RL10 went into summer yesterday, is still in summer, and is steeply up. That's good. So the RL10 price is 377.5. And the entire day was above between Z2 and Z3. So that's really, really a positive sign. The PSAR incremented upwards and is around 371. Bollinger Band mean 369. Z1 is now also the 10-day low at 365. This 10-day range is 4 3/4%. There's a belly of the dragon right here, also just below the Bollinger Band mean, like it 369 also, and another belly of a dragon here. But this is really positive. 30-day low was made 29 days ago. Pretty soon that's going to move up to here. And that's going to be 361. But for one more day, that 30-day range from 359 to 381 is $22, and that's 5.89%. Now you notice this upward move is starting to gain momentum, and you can see that in the way that the Bollinger Bands are starting to curl to the outside. So there had been, from here, there was this kind of Z3, you can see the Z3 pinches coming in, and this distance was getting tighter, so the range was compressing. But right here, these last 2 days have caused that pinch to unfold to the upside. So in one sense, this is a Z3 breakout. and then off we go. And so that makes, the next upward move up here, and this is about 391. This is slightly just off the chart, but if I expanded this a little bit so you could see the peak Z3 is, and since there's no resistance, that's just really the next statistical target is up there at 391. And if it gets above 391, that just tells you what an extraordinary move this really is. So that's all good. That's the trade frame that we're going to work on. Tom Hardison, do you feel up to doing one when we get to the case study? Otherwise, I will toss it back over to Lisa. It's her turn. All right, let's take a look at the market health check now. Okay, Tom. All right, so let's find the S&P. Here's SPY was at 0.57. The Dow was at 0.17. Treasuries lost again. They're down to, they were at minus 0.32. The small caps lagged again today. They were down minus 0.22. And then the Qs were the winner of the day at plus 1.9. So let's take a look at the sectors that underperformed the S&P today. Healthcare, 0.48. Clean energy, 0.25. The biotech, 0.22. Dipping into the negative territory, finance and energy, minus 0.06 and 0.12, so basically flat. And materials, minus 0.48. The VIX, minus 0.9. Oil exploration, minus 1.55. The lithium and battery ETF, minus 2.3. Wheat and precious, minus 0.4.5. This is the Ethereum crypto, minus 5.8. Silver, minus 7%. Some of the symbols that underperformed then, starting from the bottom. So QS, this quantum space, down 8.5. That is a really volatile swing candidate and offers some nice intraday moves as well. So that's going to be on my long-term list as a reliable, high volume, high volatility mover. In that they do the lithium batteries and an alternative to the Tesla battery. Devon Energy, 2.5. Bitcoin down minus 1.22. Alcoa, Win, Nvidia, Nikola, CRISPR was the big winner yesterday, was down. Walmart pretty much flat, along with CAT. Now, sectors to the upside that outperformed the S&P. Tech up 2/3. Mexico 1.2. Brazil 1.45. Simon Property Group is our commercial real estate placeholder, 1.6. Japan 1.8. ARC Genomics, that's that biotech. So I like that was better than the conventional, ARC. The ARC Genomics was up 2.4, while the S&P biotech was only up 0.22. So ARC is still continuing to outperform. Oil 2.6. Emerging markets 2.65. The FANGs 3%. Tesla just, I had to hold my nose and buy it on a break. I was just committed to buying a new high. I just can't understand it. It kills me. But I was able to get back in today. I can't believe I sold that at 620. What an idiot. So Tesla 7.8. NIO, that's the one that I do have on a swing. That's the Chinese electric car, was up 8.5%. And U.S. Steel up 9%. U.S. Steel back up at 22. Remember, we first started swing trading that on this last round down around 17. So we've been trading it between 7 and 22 so far. So a lot of movers, most of it tech, and then some of these selected emerging markets. I think those are working because the market is betting on the U.S., and if the U.S. is going to do good, the emerging markets will do good, but they don't have the banana republic politics that we do, so I think that's why maybe emerging markets were a little bit better. So that's making Bill Scheit's swing trade that he framed for us last Saturday in the advanced swing course mastermind group. That emerging market trade is looking really good. Yeah, this is the trade that he framed last week. He had framed this this little doji and this 2-day bar, so he was ready to go on any breakout. So that entry was around 52, and he's got a nice move made on that one. So that's working pretty good. And emerging markets have been on a tear ever since that November election. And if you go back and listen to that video again, well, we said there were two things that should really do well. When Biden won and it looked like the Senate was up, that was emerging markets, and that's what emerging markets have done since we made that call. And then small caps, we said, should be postured to really make a strong move. And that's what they've done since the election. The election is that big orange blob, and that's a COTA 2 entry right there, and it's done nothing but go. So this is still in great shape. The last COTA 2 entry we made was over in here when it broke out of this yellow, and that's pretty good right now. Let's go to the weekend report before I fall asleep. Sorry about that. All right, so this is the weekend report for January 9th, tomorrow, 2021. And so this includes three sections. There's the weekend report, and there's the what we call smart steps, which is that ETF2 database that shows a broad sampling of the 100 most liquid ETFs, and it ranks them by those color codes for strength, quality, and consistency. And then it's the daily report for Friday to set us up for Monday. Hey, Lisa, while you're waiting, it should be in the file section in that courseware. If you could take a look at that. I mean, I'm going to go look on it anyway, but that occurred to me. So the market is still bullish normal. It's overbought in every dimension on the NDXs. ADX is strong at 28.8. We have a strong bullish move. When you combine that with a rising risk Z that's in the spring and moving upward, that's really favorable for upside swings. That could be really strong. So I'd be looking for a move to get up here to Z plus 2. That could be like a 5% move. If this risk Z just continues to get better and it makes a move of this magnitude like this, that could be another 5%. So that could be another $15. And that would take S&P to about 395. So that could be good. The downside is still there. I mean, this can always roll over and come down here to -1. That would take it down probably to the 10-day low, to the Bollinger Band mean. So we want to be mindful of that. These are the current holdings in. These are the current holdings in the blended monthly rebalancing, and then these would be, if we reran that database for today, that would still be these holdings, and the only difference is that it would replace ILF with XOP. All right, so the monthly report, that's a very positive sign. You have a higher low and a higher high, and it closed at the high of the day, and it's above Z2, so it's at about Z2.5. To me, your stop has to be, not lower than about 365, the monthly low. I can't see given why you would give that back. Where would I want to get short? I mean, you would have to be short if it broke down below, call that 325. This would be, you could be tactically short with daily and weekly charts, but on a monthly basis, if this thing breaks down below like 325, then it's on its way down to the Bollinger Band mean, and then Z1, and it comes back to visit this support level at like 280. So the trigger to do that for monthly long-term positions is about at 320. You might even raise that to the edge of the river in this case. I would not be offended if you started making that play, like at 335. On the weekly chart, so we had about a 7-week period in here where things were kind of just marking time. And then we had a kind of a decisive move here to the upside and a really strong finish. And that, on the weekly basis, I think my support level would be in here, just right about, I'm going to call that 375. I would not want to give back more than that. I think you could start getting short if it broke below, say, 358 on a PSAR break. That would be my trigger, and then that would give you time to play for a move back to 340 in the Bollinger Band mean and that long-term fair value. But the upside here is 400. And we've already done the daily. All right, so the blended monthly rebalancing portfolios, strong moves here all week. And the winners keep winning. The Russell up 7% for the week. Latin America 4%. Mid caps, we talked about that last week, being the stealth trade. Emerging markets also doing really well. So notice that's doing better than tech and better than the large caps. And then the losers just keep suffering. Now notice that the three other ones that are losing the most the NASDAQ 100, SPY, and DIA. So those led all last year during the COVID. But now that things are starting to brighten up, all of the more speculative plays are starting to crush them. So that's the Latin America, small caps, mid caps, emerging markets, and then all the mature globals like EFA. So that's kind of a sea change in who's leading the way. What I think that is that the emerging markets are manufacture all our consumer goods, and now Biden is promising to pump money to the consumers. So maybe that's good for emerging markets, and we would see that continue to gain. But that looks pretty solid. In ETF 22, again, it's all the defensive plays are getting smoked. This adds the energy sector, and that's had a pretty great turnaround. Financials are in there too. Big banks are going to get paid. On the ETF 32, clean energy gets added on this one. If I had a nickel for every time I told you guys about clean energy this past 12 months, I'd have a lot of nickels. That was up 17% this week. That ain't bad. XOP was the other one that's in that blended monthly portfolio, up 10%. Oh, sorry. Winners in the Dow: Goldman Sachs, JP Morgan, and Caterpillar. That's telling you about what the banks think about a Biden administration. So FAS is the triple leveraged financial sector. That's worth your attention. FAZ is the triple leveraged short ETF, but FAS is back on the docket now. Walgreens and Chevron had a pretty good turnaround week. Amgen and Intel have been the laggards in the Dow for a long while. You can see how bad they've been over the 3 and 6 month period, but they're starting to turn it around in here and are doing better than some of the other laggards. So this may be, a quality play, a value play down here on the Intel and Amgen. Worth a look. When we look at the ETF Max, so this is looking at 250 very liquid ETFs, and the absolute best one out of those 250 is PBW, the clean energy. And in the next couple places, NASDAQ clean energy, S&P global clean energy. So that ought to tell you something. That is a global phenomenon and continuing just to be amazing. And this is, you can see why I favor PBW. It's very liquid and is the best performer in that whole sector. Well, that's odd. Let me reopen that document. It looks like it got corrupted. Hey, could you look on your copy of that? See if those pages are corrupted. I'm wondering if I just recently printed them, and I'm wondering why that's. I may have to reprint that report. No, it was just a memory problem on this end. Sorry. Okay. So we're back. World market model now. All the small caps doing very well, and the large caps are lagging in the U.S. Real strength in Latin America and emerging markets. South Korea, India, Philippines, Taiwan doing well. In the this ETF report, these are very liquid ETFs. So you got regional banks in South Korea doing very well. XOP is green and white. So green and white is something I love. Was good, now great, and so therefore exploit new strength. And then you got IWM is right up in there, green and green. So it's great because and it's still great in both strength and consistency. So you want to reinforce trend following, and you can turbo that. Why? Because the winners keep winning. So that's the Russell and the Russell growth. That's pretty good. I'm just going to look at the bottom feeder. It's all the bond funds, and even the gold miners really getting smashed too. So nobody wants any of that. So Danny in the options course in the options working group is starting to look at very inexpensive calls on treasuries for the longer term, because he's looking at sometime in the next 3 months there's going to be some kind of reversal move when this enthusiasm has run its course and we get into the dog days of February and we realize that whatever the Biden administration is doing about COVID won't make a difference, and people will get depressed in the late winter. So he's looking at a longer-term options play on treasuries. That's a really good course. It's an options course that is optimized for my strategies. So a lot of options courses are generic, but he has basically shown how to take the day and the swing and the core position strategies that we use and put options on it. Very well regarded. Okay, so we've already seen the market health check. So we're over to the daily report now. Bullish normal, overbought on all these measures. Still, we've seen this part already. Today, the Dow Tactical Summary, there were 5 dojis. I like that Apple is 2.4 to 1. I think that's a buy. Salesforce was a 551W and is 2 to 1. Coca-Cola was an overreaction and is 3.4 to 1. That's a good thing. So let's see, we have Coke on here. Nice. We took a look at this one yesterday. I now remember. Because we said yesterday it was extremely oversold, and so we framed it with this little trade around this bottoming tail doji that went below Z3 and came back, and so we put that frame on there. We said if this thing moves above or moves out of that box, then we like it, and we like it coming back to the Bollinger Band mean as part of this larger trade frame. And so you get this kind of move today. If I can get this out of the way. It opened where it closed and then did nothing but go straight up from 49 3/4 to 51. And so the intraday move on Coca-Cola, that's just nothing but goodness. You get a bunch of COTA 2s in here. You have a brilliant Z3 pinch breakout. That's fake 1 go 2. So lots of opportunities to take advantage of that upward move in Coca-Cola. And that should be ready for some more work tomorrow. It's still 3.4 to 1. So even if you didn't get it today, getting that second day momentum still gives you a framed 3.4 to 1. 3M is interesting. It's a channeling and an overreaction and tests out at 2.2 to 1. And because the symbol is red, you can see that means it was a big, one of the percent losers today. So if we looked at 3M, let's go to the daily. Yep. So this is pretty nice. So the last time it was down at these levels, you can see it had a Z3 breakdown the last couple days, came all the way back to this like support level over here. The last time it was here was an SSC that moved all the way back up to 180 from 160, and it has collapsed down into here. So if this thing reverses, the same people who were buying it over here may now love it. And so if this thing bottoms out, this is where you would start stocking it on hourly charts. And intraday, you could buy an hourly chart breakout to the upside. And then if it closed well, you might keep 1/5 of that position thinking that you could get this kind of a move. And then you notice that previously when it has found support and rolled over, it makes that kind of a move a pretty reliable swing because of its strong connection to commodities and industrials. So 3M is interesting. That extreme move to the downside back to fair value. Now, if it breaks above fair value, basically at 167, I'd be interested in buying it like buying above the green line with a stop probably down here, like about 160. So maybe a $2 stop. And then with the target being, I think the Bollinger Band mean about 174, that gives you about a 4 to 1 reward to risk. Yeah. In the ETF Tactical Summary, just notice how many things broke out in a massive way today. All of the internationals, emerging markets, EFA, Asia less Japan, Brazil, Mexico, all the breakouts. Oops. Gold had a channeling and an overreaction as 2.7 to 1 as a defensive play. The real estate is 2.1 defensive play, and treasuries 4.4 to 1. It's down to 151. 150 has been a strong support level. So there's some possibilities on that one. Auto framer, treasuries is in the number 1 position. Here's all of the framing data for that. You have Coke, gold, and Apple all in the wheelhouse for very nice reward to risk ratios based on trade location. So all of those would be a catch-up trade if they were going to catch up to the rest of the market moving out. That's the way to play that. Only 2 symbols, Salesforce and Johnson & Johnson, were squeezed enough to make a nice tradable. I like that Apple was on that list, though. It's only 1.8 to 1, but I still like that. I think that's a sleeper. Lots of symbols back in the summer, and the living is easy, as the song would go. Chevron, Nike, Amgen, and McDonald's on the big breakouts today. Coca-Cola starting its little rally. And then just notice all of the internationals that are just crushing it now that the U.S. is trying to crawl its way out of the swamp. I continued to be the coyote master opportunist right now. Okay, so that's what I want to cover on the weekend report. Remember, I will, if you have swing charts that you want me to look at, post them tomorrow in Campfire, and I'll talk about them. Yeah, swing trades for tomorrow, and then the shorter term trades for Sunday night. All right. Tom Hardison, are you ready, sir? Okay. Okay, we're going to just zoom in on this a little bit so we can see what's going on. Ah, crap, sorry. All right, so this was the close yesterday, and the Z3, it closed with the Z3 pinch here. Get this out of the way. And so let me just draw the marker. So that's where it closed yesterday. So one of the things I like to do is find the Z3 pinch of the previous day and then use that to kind of size the noise box for the next day. So that when I bring that up here and straddle the critical state that I see, I'm just going to expand that a little bit. So the size of that yellow zone, I like to correlate to the pure noise box of the previous day. So my hypothesis is something like when price is directional, that means either the bulls or the bears are winning, and that makes the range expand and the Bollinger Bands expand. When it gets sideways quiet and there's nobody trying to push the market around, it just gets into it's just idling like an old diesel, just waiting to do some work. And so whatever the width from Z3 to Z3 at that time looks to me like a reasonable definition of pure noise, no directional signal. So I put a box on that, and then I say, well, if this is how wide the Z3 channels are when it's just idling and there's no signal, then if I straddle price with that and it breaks out, a breakout of that box would imply that there is now a signal happening. Okay, so I kind of use that. I try to use that logic. The absence of signal is noise. And so I want to wait for something to break out of the noise in order to start taking the directional signal. All right, so let's come over and take a look at the frame. So what happened was it closed here, and then on good news, it gapped up to here. Here was yesterday's VWAP. So even though it closed down here, it opened here, excuse me, at that dotted blue line, and then sold off. And so now the 5 minute high looks like this. That's the opening range 5 minutes. And then so what it did during those 5 minutes was basically sold off a fraction, recovered the same fraction approximately to the previous high, and here's the peak of the RL10, and then came back halfway right back to the VWAP and is now stuck right on the VWAP with a pretty tight range between high and low. And it's from the low of the day, it's still this far down to yesterday's close. So that's the gap that would have to be closed if this thing goes to the downside, right? So that's sort of the the argument why we are in a critical state, that this thing has gapped up, has moved around a little bit, but has settled back on the VWAP, and now we're 10 minutes into the day, and we're right in the middle of the dragon, which is straddling the VWAP, and price is on the yellow dot. So I take the size of that box and I expand a little bit. So I put 1 as a breakout above the RL10 hump. That's 1. 2, I basically just a new high of the day. And 3, I just doubled that size. So I gave us 1, 2, and 3 to the upside. 2 and 3 are both clear breakouts to the upside. I wanted to, how much confirmation did you want to have? So 3 is kind of like a Z3, the previous Z3 pinch from down here. Looking to the downside, I have 4 basically at the PSAR reversal. So let me slide 4 back over for you so you can see it. So 4 would be a breakdown of the PSAR. I then went and drew 6. Six was a breakdown below the Bollinger Band mean, and that would be like on its way to the previous Bollinger Band mean and yesterday's close, and then all the way down to the fair value. So if 6 is here and 4 is there, then I just split the difference with 5, and that's about the same price increment as in between 1 and 2, 2 and 3. Okay, so the trade frame that I put on was basically the yellow zone. The noise zone is the yellow between basically the hump of the dragon at 1 and the PSAR flip at 4, and then price midpoint I just put as the dotted line. So you can either use that frame provided to you by your assistant, your craftsman, your little trading robot just set that up, or you can tell me to adjust those lines anywhere you want, and I'd be willing to do that for you. Okay, so Tom wants long at 1, short at 4, and using the dotted blue line, so half the yellow box as the initial stop. Fair enough. You guys are starting to break the code. Why not? Why not just be done with it? Just get in. The next thing that I'm going to teach you is that you can actually think about, if you had like a directional bias, you could just decide, like if you wanted to say, hey, I think this thing is going to go up, or flip a coin, I'll just get long at 0 with a stop at 4. Then if it breaks out through 1, where I would want to get long anyway, then I already have 1R in hand. But if it goes immediately south and gets me short at 4, okay, I lose 1, but now I'm short at 4. So half the time, so if that's a coin, that's really just a coin flip trade. But if you ever had a directional bias, sometimes I'd just say, you know what, let me just pick one and go with it. In this case, I might go long because there's a gap up. But if I had some other indications, like maybe this was previously really strong, I haven't given any of that information. But in the future, that's an advanced technique that we'll end up talking about, is that once you get this standard frame with the 1 and the 4, that you might just think about, instead of just waiting, let me buy it when it's quiet. That way I don't have any slippage, and life is interesting. Okay, so our basic strategy then is going to be this, which by the breakout of the yellow box in either direction, with the stop at the thick red line. Okay? Yeah. And I would agree with you, the directional bias you could have, because what you're noticing is that the RL10 rolled over, but now is starting to roll up again and holding support at the VWAP. So technically, you could buy it now as a COT at 2. If you buy it at 1, then it's an emerging dragon. And the difference is you're giving up the potential of the gains of the upper half of the yellow box in order to get the confirmation that it's moving up. So good insight. Just put that in your trick bag. Okay. And for those of you playing along at home, make your trading plan. So we are long at 1. And our stop is the big fat red line. Now, one thing you might notice is and I like to do this just to start in, if things went according to normal, then that Bollinger Band mean should just go like this forever, right? So whatever energy has propelled this thing with a gap up, that's what the Bollinger Band mean should do. And then the PSAR dots should look something like that. If it maintains that same energy of goodness, right? So that's just something to start visualizing potential futures. So if it stayed like north and west of this line, if price stayed up, to the north and west, like it's doing, if it stays north and west of this line, that would be like an A trade. If it got into the land between the rivers, that's kind of a B, So that's just kind of a way to start categorizing the kinds of moves. So we went up through 2, pulled back, and then resumed. So now price is up here at 2. I should have asked you if you're thinking about a second position, 2, 3, or 7. I neglected to do that. Okay. And what do you want to do with your stop? To 1.5 or 1.25. Okay. Something like about a 1 bar low. And then if you get another move up on that next bar, instantly move that second position to no lose. Yeah, this is where you're paying that fireman to protect your butt. He nudges you out here for a scratch trade. I'm going to give you an edge of the dragon for a scratch trade. Or actually, that's a no lose plus dinner for 2. Now, if you had not put the second position on, and you were just trading the first one and just trusting the PSAR, what you end up is getting rid of you don't get paid for the runaway moves to the upside, but it keeps you in reasonable positions longer. So I'm gonna bring our yellow box back up and say now something like this maybe. You tell me where you want to get short and where you want to get long again. That yellow box is now the high of the day, or maybe a breakdown below the dragon. Does that feel reasonable? Um, the soonest I would say is probably the RLX, the crossing the dragon. The second place to get short might be a breakdown below. Maybe the original big thick red line feels about correct. And then maybe a breakdown of the original yellow box, something like that. So maybe 4, 5, 6, something like that. So if that was what the robot trade framer, would you adjust that trade frame? So you already like getting long at 1. That would be a new high of the day. Now, where would you, if this thing started failing, where would you want to get short? And I'll adjust the box to where you want to get short. The first place that you would consider getting short. 4 is drawn at the break of the dragon. If I slid that down a little bit, this would be a break below the VWAP. So you could draw 4 at the VWAP. Okay, so break of the VWAP would be, I'm going to adjust 4 to there. And then I'll bring the box down a little bit. And that would bring that would be the midpoint of that yellow box. If you wanted to use half a yellow box. So does that look reasonable? Okay, so you're holding right now you got about a fraction, you have a no lose plus dinner for 2 in hand from the first trade cycle, which was this. So we're starting up with just a little bit of money in hand, but we got our money back plus dinner. Okay, so we're long again at 1. Stop is at the dotted line. I'm going to adjust that PSAR dot to reflect the new angle of the PSAR. As a reference, as a visual guide. And then notice the Bollinger Band mean is actually getting steeper to the upside. So this is still a strong upward trend, even though we got stopped out of that other one because of the tight stop. So that's okay. And notice the RL90 is really strong. And the RL10 is where you entered. Hmm. Let's see if I can. Testing 1, 2. Okay. Yeah, you guys can hear my voice okay? Yeah, Tom, are you getting audio? Okay. Okay, so second position at 2, 2.5. So let me just raise that to, that's like a breakout of the RL30. Would that be about right? Yeah. Okay, so I'll just adjust that frame. You know, if your broker supports visual trading on a chart, you can actually have your indicators geared. Yeah, I mean, you can actually have limit orders that trigger. So, like at Daniel's Trading, I can do that for when I'm trading futures. So that's an actual order that's in the market. When I drag it, it changes the pricing automatically for me. So I like to splat those lines on there and just quickly drag them into position with standard position sizing. Makes it very efficient. Okay. I'm going to assume you got the stop in the same place, just leaving it. Okay. Second position. The Bollinger Band mean is starting to flatten out a little bit here. And the Z3s are starting to pinch a little bit. But we're at a new intraday high and raising the stop now like a sniper to the belly of the dragon. Okay. That's a little bit faster than the Wu Wei, but I wouldn't disagree with that one. Okay, so now price has moved up here to the yellow dot. Yep. That's, yeah, we're 30 minutes in. And so now it's all today's price action. And now the influence of the gap is gone. Tom, any adjustments on the stop? Okay. Trailing with the PSAR until the PSAR picks up with it. Thoughts on the third position? And would that stop be a stop and reverse or just out? So 7 would also be a Z3 breakout. So just stop and then reframe. Okay? Got it. Something like that for the stop. So right now our stop is at this level, and that's just going to keep sliding up. This stop would just keep sliding up the that PSAR scale at any given moment. Okay. This is one where I would suggest, because you've got 3 positions on and your stop would be here, if your stop got hit here, then the losses on the 3rd position negate the gains on the 2nd position. So so now a 2-bar low. Yeah, that's exactly what I was going to say. So now I like jumping that stop, that much. And then leaving that in place until it connects to that sliding PSAR. And now what you've done is you're going to lock in a really good win. So there's a new high. I should have asked you where your 4th position would be. Okay, so ratchet to like a 2-bar low would be here. Okay. Which is an improvement over. Now what you've done is you've given yourself, the 3rd position is in the money. Now this is really a science project. Yeah. Tom, so it feels like 2 legs are done and 4th position on it. So the yellow dot feels like it could be a kata 2, 4th position. What do you think? Want to give that a try? And the 2 legs would feel something like a move from here to there. That feels like the 1st leg, and then this feels like the 2nd leg. So in theory, if this is going to work, this could give you like this kind of a move up. That would sort of be, if we had a 3rd leg up, that's what that would feel like. And the dragon, yeah, you're right. Dragon very, very thin. This is grinding. This is grinding upwards. So the 4th. Here's kind of the way I would look at that. If you think about it, a 4th position added at the yellow dot with a really tight stop like that. If this thing that would have reversed you, you're compared to the size of your risk, that's it. You're only risking like a 1/3 of the initial risk. But if this thing does actually grind up, it's actually not bad. So that's one of those. I mean, why not? The downside is so narrow that adding a 4th position almost becomes 0 risk. So just something to think about. And out. And that gives you like an improved sniper. So our gains on that one, and then the risk box was not very big. Calibrated eyeball right there. So on the first position, you had 1, 2. It's going to feel like 4. 3. 4. The second position gives you basically 3R, so that's 7. The third position gives you a half, so you add a little bit of maybe slippage and whatnot. So that's about 7. And then if you'd taken that as a fourth position, trivial, that would eat half an R on. So that's it. So that turns out to be about 7R so far. I'm going to leave that frame still on as an indicator for the possible upside. So now we're just going to go through the sequence. Price is at that red dot. Where's the first place that you would get long? New high? So I'm going to put the top of the yellow box right there. Just get this thing out of the way here. All right, where would you get short? That's the PSAR. That's a break of the Bollinger Band mean. Yeah, that feels correct to me too. That splits the difference on the yellow box. Um, So that's the Z1 and the and then a break of the VWAP for 5 and 6. That feel about correct? Yeah, the Z3s have not really pinched. They're just kind of cruising along because of that long, steady grind to the north. That feels like that long cross country, you know, that cross country train. It would have to stay in that yellow box for a long time for this thing to really to grind like that, to become sideways quiet channel. So short. Stop at the dotted yellow. Where would your second position be? 6, I agree. Because I want to see because of that really strong grinding upward move, I really want to see that. So I'm going to get 5. I'm going to leave 5 on there for now. But okay, so it comes back and hits your stop, and it's basically the price crosses the dragon. So you're out at the dotted line for -1. Do you want that to be a stop and reverse? Or wait for the breakout of the yellow box again? So now you're +6 for the day. So essentially, this is just waiting for the a reset of the previous trade frame. It's like just a cleansing breath. Now, another way to look at that, if that had been more of a pinch, that might be the candidate for that. If this had been a pinch and if that had been a Z3 breakout, then that quick reversal gives you the justification for a quick stop and reverse. But we didn't have a super pinch yet. So I don't disagree with that. So now we're starting to get that grind. Now notice that we have a Z3 pinch because these little guys have pinched down. But this last little bit of a surge right here was enough to start opening up the Z3 lines. It's going to start to expand, and the move that's making it expand is an upward move. Yeah, and the RL30 getting ready to come out of the river, which would be a signal for the beginning of trending behavior. So this is the case, and then if you look closely on that, you would see also the RL10 has now turned to summer. So this is you could actually think of that green line at 1 is now a Z2 breakout. But this where I'm going to draw that green dot, you could think of that as a Kata 2 entry in here because it's just on the north shore of the dragon. So I'll give you a chance to buy it right now if you want it. Or you could wait for the yellow breakout at 1. Okay, got it. Going to maintain the idea of long at 1. Okay. See, the alternative on this was if you bought it right here, and then you would just, I would like tighten up the stop. I would make it look like this for my wrist box and use the PSAR dot instead of breaking out all the way to the bottom of the yellow. So that's just an alternative framing. Okay. All right. So the plan would be still long at 1 if it breaks above. All right. So long at 1 and stop at the dotted line, essentially. Or I'll let you, if you want, the PSAR, because the PSAR frame looks like it's going to be this. The PSAR exit looks like that dotted line. Yeah, well, you don't know what that next candle is going to be, and this one is a breakout, and then it closed well, so you'd be happy to have entered as it breaks out. So that's just one of those deals. You actually enter on this candle as it's breaking out, and then it closes. But then if you say, oh, if it closes outside, then you're not even going to enter until it gets to 2. So this is one of those, it's just better to hold your nose and buy it. Otherwise, you start overthinking it. No change? All right, stop at the blue line. So this is still in play until it catches the PSAR. So it's now caught the PSAR. So now it's going to be the PSAR. Fair enough? So that's almost like a modified Wu Wei in that sense. Okay, so now that feels pretty good. Price is up here. Second position at 3, I would agree with that, because now you have a real justification because it's a breakout of the previous. The only concern I have here is the that RL90 is starting to slow, but that's because of this place here where it didn't even break down. It only broke down half the way to the VWAP. So it's normal for this to slow down a little bit. And then if this was the second and the first and second leg got it to here, our original estimate, if there's a third leg, it gets to here. So if you take your second position here, you still got a reasonable upside to here. So that looks like a pretty good entry. Now, your stop right now is at this PSAR. So that could actually lose money if that PSAR got hit right now. So I would just tell you, do that and be done with it, right? And that way you've locked in. See, this would lock in a 2-bar low to here. This one locks in the 1-bar low. If it reversed this great big bar, why wait for the second bar low? I would just tell you, no, I'm going to order you to use the 1-bar low for right now. I don't have any premonition on this. I mean, I don't know, but that's just, anytime I get a really strong upward bar and it's already at Z3, and I'm in the third leg, man, I'm fighting for nickels here, right? Of course, you'd have been right if you were, well, you were at the 2-bar low. That would still hit you here. So we didn't get the second position in. We did get stopped here. We did lock in this green, then compared to the stop. So we locked in an R on the first position, and that's like respect the R. You know what I mean? Now I'm going to give you the option, because you have talked before about you like the idea of buying new daily highs. This would be the place where if you were going to buy a new high, you could buy it right here. You were going to add a second position before at 3. So this lets you buy it a little bit cheaper if you want it right now. And then if you pick the same place you got out as which is like Z1, and pick that as your risk box, what do you think about that? So you're at +7 for the day. Okay, got it. And stop at the red line. Got it? So your entry was an improvement over 3. You got that there. Your risk box was this. And your gain box is a little bit better than 1R. This would be the PSAR stop. I would just order you to take no lose plus dinner for 2, or half an R. That would be half an R at like the spine of the dragon. What do you think? You could take either the PSAR dot or a scratch. Those are 3 logical places you could stop. Okay, half R. That's where the PSAR would probably pick it up at, unless you also accelerate the stop a little bit more. So the green box is what you've locked in. The blue box is unprotected gains, which is 2R. You have locked in half an R, and you have 2R of unprotected gains. That's, 1, 2, 3. So from the top down, it's 1, 2, 3, 4. So you would, a 2-bar low would be this one here. A 1-bar low would be this one here. Okay, 2-bar low. So those are the unprotected gains. These are the protected gains. Okay? This would be the 2-bar low. This would be the 1-bar low. And this one would be the Z1, or bottom of the dragon. Two-bar low. And the reason I think, to consider either the 1 or the 2-bar low now is because we are at the extension of what we thought a reasonable third leg would be. And we're into the land of almost of irrational exuberance right now. So 1-bar low, I would also agree with that, especially because the size of this last bar was smaller than the range expansion bars. So it almost feels like it's slowing down. You know what I mean? We're just going to count the red as the slippage, right? What's that telling you? That's what I do right there. Because I'm already above my rational exuberance. Now, to be fair, if you kept the red line, you're right at the edge of the rational exuberance. It's the skin of the dragon, so that's not giving that much back. But I like fighting for nickels, and you only got one position on there anyway. So you could either take it now or wait for the red line. Or wait for that, like a 1-bar low. Like if you were going to do a 1-bar low, I would just take it now anyway. Either take it now or take the red line. I agree. Take it now. Now, Now the question would be, if you take it now, where would you re-enter? Would you take this re-entry? Because we're above that third leg extension right now. Would you even take this, or would you just call that a day? Like you're trying to squeeze blood from a turnip. Okay, so, whoops, now we got this. Where would you get long, if at all? I'm going to say, I'm just, to get it on the board, that would be a breakout of the RL10. This would be skin of the dragon, spine of the dragon, Z1, PSAR dot would probably be right about there. Yeah, it's probably a shortage of will. Who wants to trade at lunch? I do. So this is a chance where you say, all right, let me just, I'm getting so close to this. Maybe I'm too close. So that's what that thing feels like right now. And you're probably, let's see, 1, 2, that got 3R on that one. So you're at plus 10. You want to eat some lunch or frame a trade? You eat when the market's closed. Food is a sign of weakness. Get to the zero state, frame the trade, and let's trade. So the way to reset that, this is where you use the chip. Where you might say, let me get a down arrow here and say, you tell me if price started dropping right now, like on one big bar, where would you get short? Skin of the dragon, Z1, PSAR, Bollinger Band mean. So short at the Bollinger Band mean. So that would make your box look like this. And the halfway point through that box is roughly there. That feel approximately correct? Now, as this Bollinger Band mean rises, theoretically that box could get smaller and smaller, right? Would that be your intention? Or would you get short at this line regardless of where it is with respect to the Bollinger Band mean? So the question is, am I getting short because that's the price that I want to get short at? Or is it I want to get short whenever it crosses the Bollinger Band mean at any time? The idea being that the opportunity trade is this move all the way back to the VWAP. So you can see right now, if you got short at the Bollinger Band mean with the dotted blue line as your risk, that's like 3R to the VWAP, right? So yeah, as the box shrinks, so shrink the box as the Bollinger Band mean rises. Okay, got it. And at some point, you'd get an early warning when it hits that trailing PSAR. See, because that's the other thing that you think about is if this thing keeps rolling over, eventually you're going to see something like an SSC or an SFC, I should say, or an owl to the downside. So this would be that trailing 2-dot PSAR short would be that line. So that's just a thought. So that gets you long. That's like a COTA 2 entry on the long side. Stop at the blue line. And then pick up the Bollinger Band mean. I would take that stop and stop and reverse right there. I would like to get that one if I could, because it now had the PSAR flip. That's actually a SFC to the short side. And I would target back to the VWAP like this. That's what I'm hoping to gain. Like, I think it could get to the, I think it could get to the fair value on, or even like Z1 would be a leg. Then this could be a leg down to Z2, and then this one down to Z3, and then the leg down to the VWAP, something like that. That would be sort of like giving back all of those long grinding gains. See, now with my stop, if I had my stop here at the PSAR, I'd immediately right now drop that to here and lock in an R and just say, screw it. Let me see what happens now. You know what I mean? And I don't know if I'd add a second position. I might even add a second position. Yeah. And that was it for the day. And this thing, so this was U.S. Steel, and I'm not sure where it finished, but that's about 12R for the day. So pretty good work on a tightly grinding trade, right? Look how good this entry was. This entry right here. That's like that COTA 2. And even if you'd gotten that entry here, you'd have still stayed in this trade. But that's that COTA 2 entry. And it's starting a Z3 pinch breakout. I was really tempted to add here. But I really like that one too, because you got extra confirmation that it didn't break here, and you got that. Or actually, I guess we got stopped there. But that locked in an R. Then this one locked in 3R. This one lost half an R, and then this one gained, would have ended up gaining 3 by the time that thing got done. So that's what 12R looks like. So well done. Oh, I think we lost a little audio on there too. So that's, to review, that's what 12R in a grinding bull looks like. And the first initial breakout was nice and very well done. You hardly gave back any. The real beauty of this thing was the willingness to get short here, to play it to the VWAP, but then being able to stop and reverse, either stop and reverse on the fake 1, go 2, or just wait for the confirmation. And then that locked in a gain. This one locked in 3R, lose a half, gain 3. So that's one that, this is one of those, it wasn't that explosive asymptotic move. This one feels like one of those long cross-country trains that are just grinding along and just keep chugging along, and those continuing to make new daily highs during the day. Especially if you notice this, and this was done without even noticing that, oh, this was U.S. steel, and so we had extra reason to believe in the upside, and it was in the strongest, it was the strongest stock in our stack. So it was already a leading candidate for confidence. So that was just based on a pure read of the statistical indicators. So that's 12R. And then if you convert that to position sizing in the standard way, that was a week's goal to get 2 position sizing R plus some change. So you paid it forward, you paid your objectives forward 2 weeks on that trade there. I'm going to see if we can call up that intraday on U.S. Steel. I guess not. That ended up closing at 22.30. Yeah, so it ended up closing down here. So that was basically a VWAP magnet trade. So just on that first position, you end up getting 3. And that move negates the entire move out of this consolidation zone. So all of that hard work to the upside gets negated with what would have been 3 or 5R in the usual way, just getting back to the VWAP. Yeah, there was probably a bit of a lag on there, but we talked through it. When you listen to it on the video, it'll follow. I mean, I was following. I had sort of sensed where your positions were, and was trying to draw trade frames that I thought you were seeing in your mind's eye. So we'll be all right on that. Okay. All right, that's everything I got for today. Hey, we're going to do our morning call. How's 10 o'clock sound for you? 10 Central? Okay. I'll get that out for our discussion group, and then I'll do the regularly scheduled swing trade review at 12 instead of at 8 because I got the soccer matches. So 10 Central, I'm going to send the 10 Central for the story circle, and then 12 o'clock for the regular swing working group. Okay? That's everything I got for tonight. We'll get that updated and posted, and I'll send out the invite links for the Zoom meeting for tomorrow. Okay? Take good care.